And I build custom business strategies, business funding strategies, because no one person's situation is exactly the same. I help my clients get funding even if they have a new business, if you have an old business, if you have very strong credit or you have very weak credit. My new motto is that everyone is fundable with the right strategy. And tonight we're going to be definitely talking about how you can tap into those different strategies to get your business funded. And I like to do this. I wanted to do it earlier today, but didn't have time, so I'm doing it now. And the reason I'm doing this is because there's a lot of fluff, there's a lot of misinformation out here, and there's just a lot of cap, right? And so over the next, this is probably going to be 60 to 90 minutes. It may run over. I'm going to touch on a lot of different ways that you can get funding with good credit, with bad credit. If you're in the middle of rebuilding your personal credit, if you got a new business or if you got an old business. Because here's the thing, you can get funded in any of those situations. It's just a matter of knowing how to go about getting access to the funding. It's not impossible to get funding, but like anything, you have to know how to go about doing it. You got to know the rules of the game. The banks do not, they don't bend to what we want them to do. We have to learn what the rules are so that we can play the game properly. And I'll go into more into that a little later, right? But that is essentially the gist of it all, right? You want to make sure that you understand the rules of the game because you can't win a game if you don't know the rules, right? You can't win the game if you don't know the rules. You get disqualified, you know. You run the you run the All right, let me know if you can hear me. Let me know if you can hear me. One of the mics died, so I gotta switch them out and charge this mic up. Charge this one up while the other one. Boom. All right, so we good there. Right, so everyone is just tapping in. Let me know where you're tapping in from. My name is Jamal. I am a business funding coach. I have a background in the credit coaching space, so I also help my clients get their personal credit together. And I do this because I do more than simply get you funding, right? There's a lot more to it than just the funding, just the application. There's different strategies based on where you are in your journey. So we're going to talk about a couple of different things tonight. We're going to talk about the business funding basics. And by the end of all this 60, 90, maybe even 2 hours, you are going to know at least everything you need to know to start going for funding. And I'm going to demystify this process, right? It's going to be demystified so that you won't be confused anymore. I get that a lot. A lot of folks that attend my class, they're just looking for information. They heard these different things. They're not too familiar with how to go about funding, what's real, what's fake. So we're going to talk about it. So the business funding basics. I'm also going to share some strategies on how you can go about getting access to capital, even with bad credit. These are strategies that you probably have not heard of before, but you definitely want to take them into consideration when you're thinking about going to get funding. And then lastly, it's going to be all of this when we put all these tips, tricks, and things together is going to be you're going to be able to get access to at least $100,000, at least, right? So this is very much so a one-on-one. I've been talking to you guys as if you don't know what business funding is and you're not familiar with it. So some of this information may be remedial for those that are more advanced in the area. And for some people, it's just going to add clarity, right? So I've been in the space since 2018. I've been helping people with their credit since then. My background is I got into credit because they marked me as deceased. Yeah, they marked me as deceased. So I went from having absolutely no credit because if you don't know, when you die, you don't have any more credit. Just FYI, in case no one's ever died before, I have. They take your credit away. But ironically, they don't stop sending the bill. Somebody needs to fix that because if I'm dead, they need to go ahead and stop sending bills to the house because a dead person can't pay no bills, right? But after that, I grew my score up to an 815. After growing it to an 815, I needed to learn what to do with it. And from there, I discovered funding and I funded myself over $200,000 in credit. And then I started helping other people learn how to do the exact same thing. So that's my background. That's what I do. Hold on. Just for clarity, people like to, show me your credit cards and all that. So, got some credit cards. You know what I mean? I got you get the gold, you get the platinum, blah, blah, blah. What else we got up in here? We got an airline card. We got, what else we got? Just to give you guys an idea what I'm talking about. We got SoFi up in here. What else we got? Who else we got up in here? We got the Marriott. We got the Business Blue. We got Venture, Capital One, Alliant, Quicksilver. So it's the gamut. I got whatever, right? I can go as low as a Quicksilver card. I can go as high as the Amex Platinums. So, that's what my little funding spree, my journey looks like, okay? But anyway, back to it. And yes, I have a reason for every single card that I have. Every card has a very specific reason. I didn't just go out and collect a bunch of cards just for the sake of having them. They all serve a very exact purpose, right? But anyway, so it's a couple of things. We're going to be talking about different strategies for funding that no one else is talking about. I've helped dozens of other people, hundreds of other people, and dozens of small business owners get access to capital. And I'm always learning, right? There's always new information coming out. There's always new lenders. The banks themselves are always changing up their rules, right? And we're going to talk about some of those rules because the rules are what allows you to get access to the money. We can't be out here making up our own rules expecting to get the bread. No, I'm good on that. I have Bitcoin. Actually, I'm gonna tell you this. I don't need to max them out because this card right here, the SoFi card, this card, the Gemini card, and the M1 card gives you cash back in the form of crypto. So I don't need to max out my cards to buy crypto. I actually just MS, and this gives me 2% cash back. So I can MS this card and earn 2% in crypto. And hold on. I got another one for you. One more. Let me follow up. Now, this is not a credit card, but Coinbase card. In the peak season of the pandemic, This bad boy gave you 4% back in the form of crypto. I was able to like make a couple of down payments on a car using the cash back from this one. So that's how I bought my crypto, with cash back. I did not max out my credit cards. I did max them out on doing some other things, but needless to say, right? So I'm going to be sharing some different information with you guys. Okay. And so throughout this time, feel free to take notes. I don't have any screenshots or anything. I am reading a presentation. Everyone that attends my class on Sundays, they'll get the visual. You guys, you're just going to get the information. Sorry about that, right? Now, this is really catered more so to entrepreneurs, investors, established business owners, and new entrepreneurs. It's the internet. I can't help who else sees it, but just know that every time I'm speaking from the standpoint of those who want to elevate and get more out of life. If you're an entrepreneur, whether you're a brand new entrepreneur, let me know you're a brand new entrepreneur. Just drop new in the comments. Or if you're a seasoned business owner, by seasoned, I mean you've been on your journey for more than 2 years. If you've been on a journey for more than 2 years, drop owner in the comments. Okay, let me know who's here. More than happy to interact. And for my new entrepreneurs, you're just navigating this space. I hope and the goal is that you get some clarity at the end of this. I will be moving kind of fast. It's a lot of information. And at the end of the day, I just want you guys to take action, right? If you like anything that you hear, definitely give me a thumbs up. Definitely share this out to anyone else who may find this information useful. Feel free to fact check me. Share this out with other people who you think will be able to poke holes in my theories, right? I'm always up for fact checking. I'm all about it. You see the glasses. I'm a nerdy looking guy. I got a big head. I'm all about the facts. So I always start this off because this is important. You guys are searching for this. So you know that every business owner is going to experience some kind of cash flow issue, right? You heard the statistics. 99% of businesses go out of business within the first 5 years due to lack of cash flow, lack of access to capital to keep their doors open. We saw this firsthand with the pandemic. We're now at the end of that, and all of that money that was out during the pandemic has since dried up, and people are scrambling to get access to more capital. But the thing is, no one really knows how to do it, or they don't know how to do it properly, or what they thought they knew from 2020, 2021, even 2023 is no longer relevant. The banks that were giving out $50,000 are now only giving out $25,000. The banks that were offering foreign entity funding are no longer offering foreign entity funding. So as a business owner, we always have to be on the up and up, on the latest and greatest when it comes to getting access to capital, right? And I speak to a lot of business owners and a lot of different parts of their journey. To my business owners that have good credit, you have proper cash flow, your business is properly structured, everything seems like it's working perfectly for you. You may be thinking like, man, I don't need to know about any of this because I got good credit, I got the cash flow, I got my savings, I'm good. I don't need to apply for any new credit. To that, I say this, keep this in mind, right? Apple, Tesla, Amazon. These are some of the biggest companies, Nvidia, biggest companies on the planet. They're the biggest companies on the planet. And yet they all have debt. Apple in particular has over $100 billion with a B in debt. They're worth $3 trillion. They don't actually need to carry any debt if they don't want to, but they do. Why? Because they're using debt to improve their business. They're using debt to expand their services, R&D, hiring new people, hire new people. Yep, you can do that. Hire new people and make other investments into their company. So if a company as large as Apple with a $3 trillion net worth is constantly using debt to invest into other asset classes, why wouldn't we? Right? If you're a small business owner, why not follow the same exact strategy that these mega companies are following? The blueprint is there. We just have to do it. Right? And so 82% of businesses experience a cash flow issue. Going back to Tesla, right? Before Elon blew up, or Tesla blew up and expanded to what it is today, regardless of its ebbs and flows, because it's a very volatile company with a volatile leader, Tesla was on the verge of bankruptcy due to lack of cash flow, due to mismanagement, due to not having access to the funding, right? It's recorded. Tesla would have went out of business if the Roadster didn't take off the way that it took off, or the Model S, right? Saved the company. Why? Because they didn't have the access, they didn't have the cash flow, right? So not having access to funding will always put you at a disadvantage. Always. It's always going to put you at a disadvantage if you don't have the cash flow, you don't have the access to funding. As a business owner, it is your duty to always be searching for new money. Always. There's a reason that these companies have an entire department dedicated to getting them funding. It's called the financial department. They have an entire team dedicated to managing the money, keeping the money, and growing the money. If a $3 trillion company has a whole team dedicated to doing this, why don't we, as smaller investors, entrepreneurs, and seasoned business owners, we need that. It is imperative, right? The CFO coaches in a way and advises the CEO about the money. Why don't you have one? Some people, I'll just do it all myself. I'll just sit on YouTube for hours and hours. You can, absolutely, you can do that. We can be chummy right here. We can be besties on YouTube, sharing information. Or you can partner with someone that already has all the information and can simply build out a strategy for your company as your company grows and expands and changes and navigates this new landscape that we're in right now. This credit crunch is not going away. So, with all that being said, how's your current search for your funding going for you and your company right now? Whether you're a new business owner, established business owner, or an investor, let me know. You know, drop a comment. Lost and Founds is definitely dropping their comments. Appreciate that. Right. So, right now, a lot of us are experiencing some setbacks. We have our applications are getting denied, even if we may have had some successes, right? Maybe you work with a company, you got a couple of successes, you got some wins, you got 100,000, 200,000, half a million in funding, but that money is drying up. Or maybe you're cash flow heavy, you're cash heavy, so you've been paying for things in cash, right? And one of my clients that I work with, this. Boom. She was tired of having her money tied up, right? So once she got to the point she got tired of getting her money tied up, she was like, "Oh, I need funding." Again, high income earner, good credit. It should be on now. You should definitely be able to hear now. Um, Good credit, but she didn't want to keep having to use her own money. Right? Sometimes it's not about not having the money; it's about just repositioning yourself. So we went on. Oh yeah. Um, Let me see if this one. Let me see if I got some energy on this one. Sound check, sound check, sound check. Yeah, the mics die. Yep, yep. All right. So she got tired of using her own funds to invest in the fix and flips, right? So we got her funding. Now, when it comes to this particular strategy, I always say there's always a strategy for everything. She was a sole prop, meaning she was buying properties, she was investing in properties, she was a landlord without even having an LLC. No LLC. We still got her $50,000 in zero interest without even having a properly formed LLC. And this is zero interest business credit. I did not get her any personal credit cards whatsoever. All of these were business credit cards. And we only went to three banks. We still got her $50,000 in zero interest as a sole prop. But me knowing better also helped her form her LLC as well, right? Because she's going to need that in the future. Now, right now, some folks are getting their applications rejected. When you're not getting your application rejected, we may be paying high interest rates, or some of us are just getting stupid low limits. Like you're submitting the applications and you can't get over $10,000. You may only be getting $3,000, $5,000, $6,000, $9,000, but something about that $10,000 mark is just not hitting. And some folks are on here right now, you just don't know where to start, right? And let me know where everyone's tapping in from. Vashelle, oh yeah, Vashelle, welcome back. I remember you from last time. Zach, what's going on? Orange, lost and found. Ben, can y'all hear me now? Cool, cool. Reginald, what's going on, brother? What's going on? Right? And some people just don't know where to begin. And so we're going to get to all that, right? That's probably why you're here. And here's the thing, right? Gurus, I am not a guru. I am a funding coach. So my goal is to help business owners get access to capital. That's what I do. That's how I operate. I don't make no money unless my clients get the money. So I'm all about helping my clients, helping my people get to the bag. And my people is anyone, any entrepreneur, any investor that wants to level up and get and get and experience a higher purpose, right? That's what I'm all about. But here's the thing, the banks and gurus that you see, they're not going to tell you exactly what a bank requires from you, because that's how they take advantage of you. That's how they keep you in the loop, just bouncing around like a ping pong ball, because they leave you in the dark, right? They tell you about a bank. They tell you, oh, Key Bank, oh, Truist Bank, oh, TD Bank, oh, this credit union, that credit union, but no one gives you any requirements. They just show you a bank. They tell you, oh, 50,000, they pull Experian, boom. Then when you go apply, it's a totally different experience from what they said. They're not going to give you all the information. The reason is because they want to give you just enough so you'll do it wrong. And then you'll end up being just applying blindly at anything. And that's when you get denied. That's when you get a low limit. That's when you end up paying a crazy interest rate. Or you just end up, is so much misinformation out there, you just end up with analysis paralysis. You don't do anything. You just keep watching videos. You just keep reading books. You just keep asking people in your Facebook group or in your circle, well, what do you think about this bank? What do you think about that bank? Da, 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 da. I've read this, I read that. And you never do anything. You got all this information and still no funding. All this information and still no banking relationships established. And that's at the end of it. And maybe it's because you've been denied a couple of times already. So it really just destroys your motivation. And you're like, man, I already submitted like 2 or 3 apps and I just keep getting denied. Or when they send me back an approval, it's some stupid interest rate that I don't want to pay for. So I'm not even going to worry about it. And no one can tell me exactly what I'm doing wrong. Right? Austin, I see you. Austin in the building. Callie in the building. So look, I'm gonna break it down for y'all right now. Here's a couple of reasons why people get denied. Y'all can write these down. I'm gonna say them as slowly as possible. But one of the first reasons people get denied is because they have the incorrect business structure. What do I mean by that? There are some banks out here that only work with LLCs. Like I previously mentioned, one of my clients, I got her $50,000 as a sole prop. That's because I avoided the banks that do not work with sole props. Some people, maybe this is something that you ran into, right? Some of you all are actually applying for banks as a sole prop when you need to be a LLC. Like you need to be a LLC. One bank in particular is Citizens Bank. As great as they are, right? Citizen can give out a bag. They only work with LLCs that are at least 6 months old with an established paydex score. So if you don't have at least 6 months of age on your LLC, Citizens Bank is not rocking with you on the business side. You can go on their personal side all day, every day, no problem. But as a business, you got to be at least an LLC with at least 6 months. So that's what I mean by you're applying with the wrong business structure. You're going to a bank, you're applying as a sole prop, a sole proprietor, but they don't work with sole proprietors. So you're just wasting your time, right? Another reason that people get denied, small business owners, investors get denied, is because they're applying for the wrong product at the wrong time. Another example, at a very specific data point, right? Bank of America has a lot of great products. They have a preferred partner program. They have zero interest credit cards. They got business lines of credit that go up to $150,000, no doc. They have all these different programs available. No, it doesn't. Yeah, I'm sorry. That was Wells Fargo that goes up to 150. Bank of America has a business line of credit that goes up to 50,000, no doc, right? But guess what? If you decided that, oh, I don't want credit cards anymore, I want this no doc business line of credit from Bank of America because I heard so much about it, but your business needs to be 2 years old before you can even get approved for that product. And here's the thing, these type of data points, the banks don't tell you because the person at the counter, even when you're opening up your business bank account, they don't know this. They have no idea. They're going to say, oh, we got to send it to underwriting. That's what they're going to say. They're going to say, oh, we're going to send it to underwriting because they don't know. Even if you ask them, they don't know, right? You got to get to the underwriter to figure this out. And even when you submit your application and after they deny you, they still don't tell you why you were denied. That's the other part. That's the part that's so frustrating. They'll just deny you and say, oh, we're going to send you a letter in the mail in 7 to 10 days. Maybe the letter comes, maybe it doesn't. And then when the letter shows up, it does not say, oh, we only offer the business line of credit to businesses that are 2 years old. It may say something generic like business age of business is too short or too new, something like that, right? It won't be as specific as saying you need to be 2 years old. So that's an example of applying for the wrong product at the wrong time. Now, conversely, with Bank of America, if you're a startup, you can apply and get approved for a business credit card. That would be applying for the right product at the right time. Another reason that's very common is that you don't have a professional or business address. You're using a PO box. They don't like that. You're going to get denied. Or you're using a UPS store. They don't like that. You're going to get denied. All right. You need to have a real virtual address because the banks will type in your address and Google you. They will absolutely Google that address. I was just trying to open up a checking account with TD Bank, and they put in the address that I gave them, and it came up as like the back of a building or something. And they were like, "Hey, so we just looked up your address. It doesn't look like this is a real address. Give us your home address." And I was like, "Damn, I don't want y'all to have my home address." It was like, "It's not public, but we need a physical address in order to do business with you. Like, if you want to open up this account, and this is just a checking account. This is not, I didn't even apply for anything. Like, I didn't apply for any credit product. This is just to open an account with them." That's how serious having the right type of address is, right? So some of this is just straight fact, straight experience. You need to have a business address. You can get one from, there's so many different ways to get one. You get it from opus.com, davinci.com. What's another one? Regis.com. Or you can hop on Google and just type in virtual address near me or business address near me. Of course, if you're in the business where you already have a physical location, maybe you have a warehouse or you offer some kind of personal service, you're an esthetician, you're a barber, you do hair or whatever, and you already have like a salon or studio, then obviously you're going to use that as the physical address, right? But it needs to be a professional business address. Now, when registering your company, do not use your home address really for your security. Because just like you can just type in right now the name of a company and the address will show up, if you use your home address, the same exact thing is going to happen when someone types in your name, right? They're going to type in Vishal LLC, and Vishal, you just so happen to put your home address. It's going to be a picture of your car in your driveway that pops up on Google. So anyone that Googles your business is going to know exactly where you live at. People are crazy out here. You don't want that, right? They don't even have to be smart enough to track your IP address. They can just Google your business and bam, they at your door. The last reason, another very common reason that we're all aware of, people get denied, is because our credit score isn't strong enough, right? When we're going to these banks, especially you see those advertisements, oh, get 100,000, get 250, get this, get that, all at 0% interest, credit card stacking, et cetera, et cetera. That's for those of us with good credit. If you're not at a 720, they're not talking to you at that point. I'm sorry to say, but it's real. That's the real. I'm not about to sell you no pipe dream. I'm not going to tell you, oh, you can get 250,000 in zero interest with a 550 EIN and an LLC. That's a lie. They're lying. They are lying to you. Okay. Especially as a startup. If you're a startup and you want 250,000 in zero interest, we want to see that 720, right? And I'm going to go into more detail about that a little later, right? And if any of this information is helpful, just let me know. Like I said, share this out with anyone else that's interested. Hold on. Banks are requiring BOI. Actually, Reginald, you got to break that down. I don't even know what BOI stands for. I'm not familiar with that particular acronym. Help me out. I know POI, but BOI, I don't know what that means. Being truthful with you on that one. All right, so boom, right? That's Philip. Boom. Y'all can't see that. Boom. Told y'all a little bit about this. Y'all already know who I am. Oh, for everyone that's just dropping in, my name is Jamal. This is my channel, The Credit Protector. I am a funding coach. I specialize in helping small business owners get access to funding. Okay. Whether you have good credit, whether you have bad credit, whether you have a business set up, whether you're a sole prop, whether you're still trying to figure out whether or not you want to start a business or not, I still can help you get access to funding. And my motto is that everyone is fundable. It's just about building and having the correct strategy for your exact situation. If even if you're not fundable right then and there at that exact moment, you can still get funded over time. I've helped clients turn denial letters into approvals. I've done the same for myself. There's always a strategy, always. Now, for those who may be joining in new, what is funding? It is literally the process of getting capital, aka money for your business. And there's a lot of ways to get money for your business. Of course, you can always ask friends and family. You don't, you can do that. You have grants because you don't have to pay that back. You have crowdfunding. Crowdfunding are things like a GoFundMe or even Kickstarter. Those type of programs are amazing because a lot of people are looking for funding for their business that they don't have to pay back. You don't have to pay back grants. You don't have to pay back crowdfunding. Typically with crowdfunding, you're asking people to give you capital so that you can basically produce the product and then deliver it, right? You can also do pre-sales. Pre-sales is just like what it sounds like. Hey, y'all, I'm coming out with a watch. I like watches, so I follow a lot of Kickstarter watch companies. They're asking people to do pre-sales. They pay $500 for the watches or whatever dollar amount. Once they hit that amount, they produce the watches. They deliver it to their customer, right? There's no payback period for those 3 ways. I just gave y'all 3 ways to fund your company without paying it back. So don't hop on here talking about you don't have to pay back the bank. You absolutely got to pay back the bank. Use these 3 ways if you're trying to get money for your business and you don't have to pay it back. All right. Another way of getting access to capital is, of course, you got private investors. I work with different real estate investors where they hit me up and they say, hey, I got a deal. Do you want to invest in it? Absolutely, I want to invest in it. I'll take my 20-30% return on my investment every day, all motherfucking day. So you have private investors you can reach out to and get capital. You have venture capitalists, meaning that you're going to sell equity of your company, right? Now, what we're going to be talking about today is, to me, out of all the different ways of getting access to capital, to me is the easiest. Traditional funding, which is going to a bank. Going to a bank or going to an alternative lender or even getting like an SBA loan, because some of them require more paperwork, but a lot of it is just simply if you got a good credit score, they'll give you money. Like, that's it. Like, hold on. All I need is a 720 FICO score, and you want to give me $100,000? They're going to be like, yes, we are. If you have a 720, we'll give you $100,000. Well, goddamn, I guess I need to go give me a 720 then. Shit. That's how easy life works. Like, I'm not about to sit here and trying to argue with the bank. I'm the original creditor. Money isn't real. We're not on a gold standard. You guys are violating my rights, blah, blah, blah. All of that is, I will caveat, all of that is true. We are not on the gold standard. Money is not real. We're not exactly the original creditor, but we are literally the source of money for the country. Like, don't get any of that twisted. All of that is true, but none of it is going to help you get money from a bank. Just put that out there. Saying none of what I just said is going to help you get money from a bank. We want to get money from the bank. We don't want to go in there arguing with them about what is and what ain't. because you're just going to still walk out there broke, walk out of the bank broke with no money. So we can worry about all that after we get the money. You know what I'm saying? So it's about, again, strategy and how you approach it. You get more bees with honey than with vinegar, right? So some ways of doing traditional funding. This is funding from a bank. You got your business lines of credit. Y'all probably have heard of these, right? You got your business lines of credit. You got zero interest financing. Of course, you have real estate, and there are hundreds of ways to fund real estate, just real estate itself. There are probably hundreds, if not thousands, of different ways to structure a deal to fund real estate. You have SBA loans. Even with SBA loans, they have multiple kinds. You got your 503, you got your 7A, you got your micro loans, right? And you can use those loans to buy a plethora of different things, whether it's other businesses, property, equipment, etc. And then you have auto loans. And we know with auto loans, you can get an auto loan as an individual under your personal credit and under your business credit. Actually, all of these different type of traditional funding sources you can get as an individual, you can get it as a sole prop, you can get it as an LLC, you can get it as a C corp, you can get it as an S corp. Okay, for those that are super savvy, I'm gonna give y'all a little secret. You can fund yourself like this 3 times as one person. One natural person can go fund yourself as a sole prop with an EIN, and then you can make a LLC and then fund the LLC. So imagine this. You already can access up to $300,000 with good credit with a 720. You have a 720, you have a 750, you can get up to like 350,000. Typically, they're gonna, on the personal side, they're gonna cap you. So it's possible to get denied because you have too much credit on your social security number. That's when you double back as a sole prop using the EIN and go for another 300,000. Then you max that out, you go again as an LLC, and guess what? LLCs don't get maxed out because they're businesses. They're expecting you to have and need a lot of capital. That's how Apple has $100 billion in debt, because it's expected for a company to have way more debt and way more access to capital than an individual, right? That's just some extra, for those that are listening. You heard what I just said, right? You can fund yourself 3 times in 3 different ways. So another traditional form is something that you may have heard of. It's called credit stacking, right? So credit stacking is a super dope strategy. I love it. This is how you can get a lot out of a little bit. So let's say you go to some place like Bank of America, you apply for one of their products, loan card, whatever, and you only get $5,000. $5,000 on the surface level, not that much, especially as a business. I mean, you can buy some of these softwares right now, cost $5,000 to implement it into your business. If you have a storefront, you just switching over your POS can cost you $5,000 or more. So it's not a lot. So you're like, damn, I need some more money. Then you switch over to the Apple Card. Yes, the Apple Card is a personal card. Totally aware of that. But hey, access to capital is access to capital. So now you're at 15,000 between Bank of America and Apple. Then you're like, man, it's still not enough. I need some more. So then you hit up your local credit union and you get 15,000. So individually, these amounts don't seem like much, but when you stack them together, you just funded yourself $30,000. Does that make sense? Now here's some of the reasons that this is dope. One, when you're working with more lenders, that means you have more opportunities. Each lender has their own internal regulations, their own internal underwriting opportunities, So one bank may tell you no, and another bank may tell you yes for the same exact product. The other thing is that as a business owner, you always want to mitigate your risk, right? You never want to have all your eggs in one basket. So it's good to have multiple relationships with banks, positive relationships, not running off on the people, but it's good to have positive relationships with these banks so that you, as the owner, can spread your risk, right? Because it's listen, it happens. We're in a recession. We're in a credit crunch. People miss payments. Okay, let's not act like it's not a thing. People miss payments. Credit cards get shut down. Credit limits get slashed. And imagine you have all of your funding through one bank, and they come back and they're going through a credit crunch because other people are defaulting, and then they come back and they see your accounts and they decide to slash your accounts, or they decide to randomly close one of your cards because you haven't used it in 3 months. Right now you just lost $15,000, right? 25,000, $30,000 because of what the bank is doing internally. You don't want to deal with that, right? You want to spread your risk. Um, Now what I'm going to do real quick while everybody's on here, let me see. Michelle asks, can you get a loan up to $1 million to buy a running business without real estate with good credit, without collateral? No, I'm going to be honest with you. $1 million, they absolutely going to want some collateral. 100%. They're not lending that much out just on good credit. Especially because with a loan like that, $1 million loan, you'll typically have to put down some kind of down payment, maybe even 20%, or you'll have to finance 20% or do seller financing. It can operate a lot like very similar to a real estate deal. And then when you're purchasing a business, a lot of people end up using SBA loans, and SBA loans do require what they call some kind of skin in the game. So they're going to want to see some kind of collateral, especially with SBA loans, right? Got a virtual office EIN a couple of weeks ago. Got my address. Need to get my license. Get my bank account. Yes, sir. Lost and found. You do not need to get your business license to get a bank account. Just FYI, only thing you need to open up a business bank account is your articles of organization, an EIN number, your photo ID, and that initial deposit. That initial deposit, I mean, just to open the account is $100. But if you're trying to walk in there, make a deposit, and then walk out with some credit approvals, 5,000 or more, they're gonna love you. They're gonna love you, especially if you go to a credit union, right? Let's see. Do. Yep, lost some sound. What else we got? What else we got? Reginald, did you ever tell me what BOI meant? Because I have no idea what that means. I ain't gonna hold you. I have no idea what that means. Can you get funding by running? Yep. So financial ownership. Yeah. Yeah. Okay. What about that? No, banks are not requiring the BOI. The BOI is strictly for the government. Banks are not asking for that at all. Yeah, that's for the government. They want to keep tracking us. I've seen there of course the big corporations. They don't like that. They're figuring out ways to work around it, right? And they're suing against it. They're claiming that it's unconstitutional because they want to get that report up out of there. You're welcome. But the big corporations, man, they got to work around for everything. They got to work around for everything. All what I can say, what they're probably going to end up doing is they're just going to bury it into. Yeah, you can actually. You can walk into a bank, open an account, and request a loan immediately. You can absolutely do that. It is possible. People do it all the time. Is it the best strategy? But is it doable? Absolutely. You can do whatever you want. Is it going to give you the best results? Maybe, maybe not. Depends on how you open up the bank account, depends on the conversation you had with the banker, depends on how much money you deposit into that bank account when you open it. But you can absolutely walk in and submit and ask for a loan. But there's again, there's a strategy for everything. There's a right way to do it. There's a wrong way to do it. But it can be done. This, y'all. Let's skip over Joelle. Right. So a couple of things. Depending on what you're trying to get from the bank. Yeah. It's a lot of depends. A lot of depend. How much are you asking for? Who are you talking to? Are you going for a grant that's offered by the bank? Or are you just going for a credit card? Or are you just going for a loan? Are you going for a business line of credit? Are you trying to form like an actual affiliation partnership with the bank? Right? A lot of different things. But yeah, you can walk in, you can ask for a loan. And it depends on the bank. Some banks are relationship based. So they're not rocking with you unless you've been with them for a little bit. Other banks, they're happy to just give you the money right then and there. Right? So a couple of things we're going to use this funding for. Of course, we're always going to use funding to expand our businesses, right? Buy new properties, buy another business, buy some real estate, buy some equipment, maybe hire some people. If you're like me, since I do a lot of marketing in the digital space these days, I use a lot of my funding for marketing and advertising, right? That's where a lot of my money goes into, right? Also working capital. You just need to make sure that the bills stay paid, your people are getting paid, covering payroll, your monthly expenses. You can use funding for any of these, right? I'm curious for those that are on here, if you have a business, what do you want to use your funding for your business? The other thing is, now let's talk about this. This is something that people are not talking about. There are 3 C's to funding. 3 C's. The gurus aren't talking about this. I haven't seen anyone else break this down. Does anyone know what the 3 C's are when it comes to funding? Does anyone know? Like Vishal mentioned it when he mentioned collateral, but does anyone else know what the 3 C's are? We spoke about 2 of them. Cool. I'm going to tell y'all now. There are 3 ways that anyone could get funded. And this is how you're able to get funding even when you have bad credit. Dope. For a courier service. Nice. I like that. I actually just met my guy Tony at a conference. He actually teaches people how to start a courier business. He teaches you how to start a medical courier business, a cargo van business, and a delivery service business. You know, he's a very dope individual. What is his name on here? Stick With Us Delivery. Check him out. He's dope. He's a very dope dude. He has about 44,000 followers on YouTube. And the company's called Stick With Us Delivery. All right. So going back to bank fundability, there are 3 things that any lender is going to look at to decide whether or not they're going to give you some money. Okay. All the YouTube videos in the world are great, but if you don't have at least one of these 3 things, you're not getting any money. I just got to keep it real with y'all, right? Y'all on here for the sauce. This is the sauce. The 3 C's are credit, cash flow, and collateral. Anyone who's offering you funding is going to be looking at one of these 3 things, unless it's a grant, unless it's a grant, right? Well, traditional funding only. I'm only talking about traditional funding. You're going to need one of these 3 things: credit, cash flow, collateral. And I'm going to be going through each one. We already spoken about credit, right? You already know that with a 720 credit score, you can get up to $300,000 even on your social security number. And yes, I'm saying it like that, on your social security number, because we got different numbers, right? Social security number is not the only tax ID number that you can lend on. You can lend on an EIN number, right? And then you can have multiple EIN numbers. for multiple business, and you can get lending on each and every one of those businesses. We're not limited to just one way, right? So of course, the first C is credit. I mean it's in the name. I can't talk about funding and not talk about credit. We got to have a good credit score, y'all. We got to. Now, I'm going to go into this because a lot of people don't fully understand the FICO score. So those of you that do understand, feel free to leave a comment, help everyone else that is new, right? If they're new to credit, they're new to this, feel free to drop your game about building up a good credit score. There's always somebody tapping in that with an 800, a 750. Let them know. Let them know what to do. So your credit score is made up of 5 parts. That's it, 5. Nothing else, just these 5 parts. All right. You're going to use your funding for marketing, supplies, company vehicles, uniforms. I love it. It sounds like an amazing enterprise. Sounds like you're launching something big. So your FICO score is made up of these 5 things. The first thing is your payment history. That is 35% of your score. That is the biggest component, which means everybody, we got to pay our shit on time. You got to. Like, not paying your shit on time immediately chops down your ability to access capital. Immediately. One late payment can completely destroy your ability to get access to capital, especially if you don't have one of the other 2 C's. The next thing is 30% of your FICO score is made up of how much you actually owe. You're going to add trade lines to your business. That's how you get a better business score. I'll talk about that too. Just give me one moment. All right. So with your FICO score, 30% of it is based on how much you owe. So this means your debt to income ratio, that is measured based on your loans and your monthly payments compared to your monthly expenditures. And then also your credit card utilization, right? Because that's a gem. Everyone's talking to you about your credit card utilization. No one's telling you about your DTI. Generally speaking, you want to keep your DTI below 40%. I literally have a friend in a mentorship who was denied an American Express because they told her DTI was too high, right? They literally said your DTI is too high, so we're not going to give you a credit card. No one talks about DTI. It's just as important as your credit card utilization. Now, your credit card utilization needs to be below 30%. The lower, the better. The lower your utilization across each individual account, the higher your actual credit limits will be. I've experimented with that myself. I've gotten approved for a credit card with 40% credit card utilization, but it was only a $5,000 credit limit. But I reduced my utilization down to about 25%. I doubled back, and that $5,000 limit turned into a $15,000 limit because I asked for a credit limit increase after paying down my utilization. It literally tripled the amount of credit I had access to from one bank. It's very important. Next thing is the length of credit history. Right now, 5 years. They want to see 5 years of credit history. That's just what it is. Other thing is your credit mix, how many different accounts you have. Credit mix is all the accounts on your credit report. So you got personal credit cards, lines of credit, an auto loan, a mortgage, right? And then the last 10% is every time you get new accounts. Now, it counts as new accounts with FICO, and if you're looking at the Vantage score, they count how many hard inquiries you have. So a couple of key things with this, right? Length of credit history. A lot of people use authorized users to beef up their. A lot of people use authorized users to build up their credit score. They see the 700, they see the 720, and then they go for funding. They still get denied. Why? It's because your score doesn't matter. The score itself is insignificant. It's about what's on your credit report. If you have a 750, and it's because every account is an authorized user, the banks can now see that it's an authorized user. You can pull up your own credit report and it'll show you what accounts are yours and then what account is an authorized user. If you have 7 accounts on your credit report, you got a 750, 760, and they're all authorized user, and you try to go to a bank and apply for some business credit, you are getting denied, my friend, immediately. So the days of just, oh, I'm just going to put a whole bunch of AUs on my credit report and then I'm going to go run up the bag, they are dead right now. Maybe they'll come back in the future when the economy opens up. But as of right now, that is not the play. That is not the move. Just let you know, because I've already helped enough people who tried that and it didn't work. All right. Now, y'all can write these down. I'm going to give y'all a couple of basic funding qualifications on the personal credit side. This is what your personal credit needs to look like. If anyone's out here telling you that you do not need good personal credit to get funding, they are lying. Okay? Now, caveat, caveat, caveat. I'm going to back up. They're not lying. They're just not giving you the full story. Can you get funding with bad credit? Yes, absolutely. You can absolutely get funding with bad credit. Can you get the amount of funding that you see in these advertisements with bad credit? No, unless you have a massive business. Because remember, if you have weak credit, then you need one of the other 2 C's. You're going to need some very heavy cash flow or some very heavy collateral to offset the fact that you have, a 550 credit score or a 575 credit score. Keep that in mind. Yeah, I have actually, you go to my website, www.crack. No, actually, you can actually, I have videos on how to remove hard inquiries on my channel. So you can just search that up on my channel. And also, if you text the word inquiries to 240-667-7460, you'll get an ebook that will tell you how to remove hard inquiries within 24 hours. So, yeah, that's part of our funding strategy. We help people get funded, and then we remove all the inquiries, right? So, bank funding qualifications. This is what you want for maximum funding, not some funding. 240-6677-460. The word inquiries, plural. Yeah. So you don't want any missed payments for the last 3 years. I know that sounds treacherous. It sounds difficult, but it's true. You don't want any late payments for the last 3 years. You want to have 2 accounts showing up on your credit report at least that have at least over $10,000. Now, others say at least 3,000. Cool. But if you want even higher limits, 10,000, 2 trade lines showing at least $10,000 that are in your name, not just AUs, but in your name, that will give you better results. Your credit utilization, you want it under 10% for maximum funding. Your credit age, it needs to be 5 years or more. And then to J, when it comes to hard inquiries, you only want about 2 hard inquiries showing up within the last 6 months. That is what your personal credit profile needs to look like in order to get maximum funding. Okay. You want $200, $300, $400,000 in one round, one spree. That's how your credit profile needs to look. All right. Now, For those who don't have perfect credit, it's a couple of ways that you can quickly improve your credit. Of course, the first thing up is going to be pay down your debts and not collections or charge offs. Those do not count. I'm talking about open active accounts on your credit. If you have high utilization on your credit cards, pay them down or get a debt consolidation loan, not a debt consolidation company, two different things. You can get a debt consolidation loan like Tilful or Happy Money, or you can get a personal loan from your credit union. Use that loan to pay down your credit cards or pay off your credit card, and that will boost your score because now you just killed off your credit card utilization. You want to add positive accounts. So if you're in the rebuilding stages of credit right now, or you only have maybe like 3 or 5 positive accounts, you want to add more, right? So if that's a secured credit card, if that's the Navy pledge loan, maybe that's like the DCU quick loan, uh, really anything like that, right? From an actual lending institution, an actual bank, or a credit union, right? Get those positive accounts. Of course, if you have negatives, you have lates, you have charge off, evictions, etc. Within, especially within the last 3 years, you want to work with a specialist that can get that off, or you can do it yourself. I have several videos for removing collections, freezing the bureaus, removing inaccurate names and addresses, and how to reverse late payments. I have multiple videos about any of those strategies on my channel, right? So you could definitely check those out. I think there's actually one in the description of this video or any other video on the channel, right? So you definitely want to do that. Or you can work with a credit repair company, right? There's nothing wrong with credit repair. We need it, right? Everyone, like if you got messed up credit, they run you around, they give you the BS. You send them the letter, they tell you it was verified, knowing damn well it's not verified because they don't verify anything. It's all computerized, right? So work with a credit repair company, get it fixed. It's going to cost you some money. Yes. Not getting access to the capital is literally costing you money too. So do you want to spend $1,200 to get access to 200,000 or no? Right? And if you're a business owner, a real investor, you don't want to spend all your time trying to dispute this negative stuff because you have real business to run. You have clients to deal with. You have a team to manage, right? You have other things to worry about besides just fixing your credit. So just use a team. Just hire somebody else to do it for you. It takes the weight off your shoulder and frees up your time so you can focus on what's more important, which is getting to the money, helping people, and making a profit. That's my little rant for that. Okay. Boom. Boom. Now, typically on Sunday, add a trade line, Candy. Just go ahead, throw a trade line on there and get you that additional age. Now, at this point, I normally just on my Sunday masterclass, I send everybody a link and they can see if they're pre-approved for a credit card. But I'm just going to go ahead and skip over that. Unless someone actually wants the link, then I could just tell you what bank you can go to, and you can see if you're pre-approved or not. All right, but if no one asks, then I'll just keep moving on from that. Let's see here. Let me double back to some of these questions. Is it wise for people to get an LLC in your name? Hold on. How to get a better credit for my business? My score is 400. CVS. To build up your business credit is actually super easy. Building a business credit is not as hard as personal. You are just going to open up some vendor accounts, place some orders, and pay the invoice. That is it. That is all. That's all you got to do. Now, the hard part when it comes to building up your business credit is knowing what businesses and what vendors actually report to Dun and Bradstreet, Experian, and Equifax. Because even though there are a lot of vendors out there that offer vendor credit for just about any service, legal services, marketing services, shirts, right? You can get materials made for you on vendor credit. Not all of them actually report to your business credit. And that's where it gets frustrating because well, not me, but several of my friends have wasted thousands of dollars trying to build up business credit. They opened up all these different vendor accounts, and like only half of the vendors actually reported to their credit. Some just didn't report at all. So they just wasted all this money and time, right? So you want to make sure when you're going to build up your business credit that you're doing business with vendors that actually report. All right. So you probably heard of Quill, Uline, Granger, eCredible, the Creative CEO. Those are just a quick handful of vendors that you can use to start building up your business credit. Okay. I'm a 400, and if you have a 400, I'm assuming you're looking at Equifax because the FICO small business score, I don't think it goes up to 400. Your Paydex score, your Paydex and your IntelliScore only goes up to 100. So if it's a 400, you might be looking at Equifax. So you have to have businesses that specifically report to Equifax. Yeah, the link. Yeah, I don't have the link right now. So boom, this is what you could do. Just type in NASA Federal Credit Union credit card pre-approval. Just throw that into Google. I don't have the link up because I wasn't actually even planning on using the link, honestly. But it's when you Google NASA credit card pre-approval, it'll come up, and then you just apply for their credit card. All right. So we went through credit, right? What we talk about? We talk about the foundation, right? We talked about why gurus don't tell you this information. We spoke about why people get denied and some of the things that you can do to avoid those denials, right? You want to make sure your business is the right structure. So when you're applying for a bank, and if you're a sole prop, make sure that bank works with sole props. If it doesn't work with a sole prop, then that's not the bank for you. Or go make a LLC and go back to that bank as a LLC instead of a sole prop. Another reason people get denied, for those that are just joining in, you're applying for the wrong thing at the wrong time. Example, you're going for a business line of credit or even a business. Two examples. One, you're going for a loan, but the loan is only for businesses that are 3 years old. You're only a year and a half. So you applied for this loan not knowing that your business needs to be 3 years old, and you're instantly denied because your business is too young. Another example is that you have a business line of credit, any of them, pick one, the ones near you, the ones that you already have a relationship with, right? I'll answer that more in depthly, Candy. Let me double back. Another is you have a business, you apply for a business line of credit, but you're 6 months old and they deny you because in order to get a business line of credit, you have to be 2 years old. Applying for the wrong product at the wrong time. No, Reginald, I don't do a mentorship at this time. I just give out all this free game, and I do one-on-one consultations, and I do custom funding strategies and plans for my clients. You're interested with any of those, definitely you can book a consultation with me. Just click the link that's pinned and let's set up a time to talk. We could talk more about your funding journey, right? I can definitely be a funding coach for a year and guide you through all of this, because all of this stuff, as far as building up your profile and your funding portfolio, you can build it out over the course of a year, 100%. Even if you don't have a business, even if you have bad credit right now, within a year, you can absolutely have an 800 credit score with $250,000 in available credit. I know because I did it. I literally was dead. Well, I didn't die, but they literally marked me as deceased and it wiped out my credit. If you're ever marked deceased on your credit report, your score goes away. It doesn't show up on Credit Karma. You can't log into anything. It fucking sucks, actually. And it took me like 45 days to figure out how to get a credit report. Right. So you always want to have access. Okay. So Reginald, yeah, man. I don't have a mentorship, but definitely, man, whatever your situation is, what you're trying to get funding, tap in, hit the link, book a consultation, man. Let's have a conversation. Now, for those of us who don't have perfect credit right now, let's say you're not at a 720, you're not even at a 700. Like my guy Reginald, shout out to you. 3 years established LLC, 655. There are actually a lot of programs that you could qualify for, my brother. They got a lot of programs for established business owners with less than perfect credit that allow you to get access to capital. They have institutions, credit unions that right now are actually offering a lot of programs right now for established business owners who have less than perfect credit or just under a 700, 100%. There are some lenders that go all the way down to 575. Like, again, everyone is fundable. There's always a way to get access to the money. You just need a strategy and you need to work with someone that knows how to get access to the capital. Where is it for your exact situation? Right? So let's talk about it. Some creative solutions for those who don't have amazing credit. You don't have an 800, you don't have a 750, but you have a business. You know, you got $1 in a dream and you just need a little extra more dollars, right? First thing you can do is, and let me backtrack. Some of these, what I'm about to share with y'all, do not require a credit check. I'm going to say this again. These are ways to fund your business without a credit check. Everyone, I hope you, Canny, you listening? Reginald, you listening? These are ways to fund your business without a credit check. So it doesn't matter what your credit, it don't matter if you got 668, a 5, it don't matter because they're not checking your credit, period. So the first thing you can do is you can always borrow against your retirement account, right? For those who are, you may already have a business and a W-2, and you're also a W-2 employee, and your employer has a retirement plan, right? I myself started working in the credit field while also being a W-2 employee. And I worked in the private sector and in the government sector. So I had a TSP, I had a 401k, I had a Roth IRA. All of these are retirement accounts, right? I appreciate it. Thank you, thank you, thank you. Definitely make sure you subscribe to me. I appreciate that, right? Share this out, leave a like, share it out with other people. So I had all three. I had a 401k, a TSP, and a Roth IRA. People don't know this, but you can borrow against your retirement accounts. And when you borrow against your retirement accounts, guess what? They do not check your credit. They don't check your credit to borrow against your 401k. They don't check it to borrow against your 503b if you are a teacher. They don't check it to borrow against the TSP if you're a government employee or the military. They don't check your credit to borrow against an IRA or Roth IRA. or a Roth 401k. They don't check your credit. If you are an employee of that company and they offer some kind of retirement program or 401k, for example, as long as you remain an employee of that company, you good, because they're just going to take the money out of your check and put it back into your 401k. And who owns the 401k? You do. So the money is just coming back to you. So you borrowed from yourself to invest into your business, and then you paying yourself back. So win. So win. A win is a win. I don't know how else to say, break that down for y'all. A win is a win. The next way that you can invest into your business, someone mentioned, I don't know if Lost and Found is still here, but he mentioned Bitcoin, right? If you have stocks and bonds, you have an investment portfolio, you can borrow against your investment portfolio. There's no credit check required for that. Typically, when you're borrowing against your portfolio, it's going to be about 70% of the value. So if you have a portfolio right now that has about $100,000 in it, you can borrow $70,000 against your portfolio with no credit check. Another great thing I love about borrowing against my portfolio is that there are no set repayment terms. So if I never pay that joint back, nobody cares. No one's coming after me. It doesn't show up on my credit report. I don't have to worry about missed payments, because if I never pay it back, they'll just take the stock and sell it and reimburse themselves. That's what's going to happen, right? So when people talk about borrowing from the bank and running off and blah, 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 just build a stock portfolio. Build a stock portfolio. You can borrow against that all you want and never pay it back. And you can keep the principal of the stock, and your stock is going to continue to grow in value while, even though you're borrowing against it. And then when you borrow against it, the interest rate is stupid cheap. Stupid cheap. Stupid cheap. I'm talking about 4%, 2%, 2%. You borrowed 70 grand at 2% interest rate. Come on, man. Y'all tripping. With no credit check, and you don't actually have to pay the shit back. Come on, man. Tripping. So those are ways that you can get access to capital with no credit check. So it doesn't matter if you got 688, 655, or 400. Don't matter. Right? This is one of the 3 C's. Remember, 3 C's: credit, cash flow, collateral. If you have a retirement account, if you have a stock portfolio, those act as collateral and back the loan. That's why they don't check your credit. The minimum amount, it will vary based on the company, the not the brokerage. What do you call it? It's going to vary based on who manages your retirement account. So you'll want to reach out to them, talk to them, ask them about all the terms, the stipulations, the repayment, et cetera, et cetera. One thing that I know for a fact, though, is once you leave that company, even if, like, I was in the government, once I left the company, the loan I took out against my TSP became due immediately upon separation from the company. Not only that, if I didn't pay it back, it was reported as income, so I had to pay tax on it. Now, depending on you, where you are in your financial journey, maybe paying tax on it is worth it. Maybe. Maybe it is, because it still doesn't show up on your credit. I'm just saying, it still doesn't show up on your credit. There are no collection letters being sent. No one calls you and asks you about the money. They'll send you a tax invoice, though, and you'll pay taxes on it, and you have to report it as income on your taxes. But no collections, no charge-offs, no impact to your credit whatsoever. Do with that what you will. Just putting it out there. Mitigate, you have to mitigate your own risk. Not financial advice, just let you know. Another way of getting funding without a credit check is going into one of the three C's again: cash flow lending. So there are, if you have, if you take payments electronically, you take payments with Square, you take payments with Stripe, you take payments with PayPal, you take payments with, what's another payment processor? Any payment processor that handles credit cards, right? They will literally lend you money based on your cash flow with no credit check. Now, you probably will have to keep your account open with them for at least 6 months. After that, they will begin evaluating the cash flow that's coming through your payment processor account. And then from there, once they do that, they're going to start offering you money. And the great thing about it is, again, there's no credit check and there are no set repayments, because as the money comes in, they're going to take their cut directly out of your sales. So you'll take the loan out, and then basically from until the loan is paid off, no, definitely not Zelle or Cash App. Those are not payment processors. Those are simply services that allow you to move money, but they are not payment processors. Actually, Zelle, actually, no. Cash App just hit me up. They will give you a little loan, but it's not a lot. I mean, I think it's like $100 or something. I don't use Zelle or Cash App, because you can't get approved for anything using those apps. Like, they're not banks, so I don't use them. But yeah, maybe if Zelle offers it, I haven't seen it, but Cash App is offering it at the moment, right? But yeah, so they'll offer you. Now, when they're doing these offers, it's typically 10 to 30% of whatever your cash flow is. So if you already are doing 60,000 a month, then typically the loan would be about 30% of your projected annual income. And then when you accept the loan, the repayment terms is that they're going to take 20% of every transaction that comes through and put that towards the loan to pay it off. So for you, it's a very easy process. It's super easy, super streamlined. Is basically, hey, are you making the money? Yes. Cool. You can pay us back. We're going to snatch it out of this account. Boom. They It's on their website. Like, they're going to all. You don't really get in contact with them for it. They get in contact with you because they are tracking your income. They're tracking how many they see the swipes. This is why it's important. Okay, just a little business 101. This is why it's important to set up real payment processors. Zelle is cool. Cash App is cool. You got to do what you got to do. Not everybody has a credit card. Not everybody has a debit card. Some people like just being cash only. I know some. My sister was one until a sub pump broke, and then it was $5,000, and she didn't want to pay $5,000. So get a payment processor: Stripe, Square, PayPal, even though I hate PayPal, Novo Bank, which is an online bank, any official payment processor, authorize.net. They will offer you loans. I would say after 6 months, maybe even a year, when they see that you're getting consistent sales. That's what they also, consistent sales. I'll be right back, y'all. I gotta pause because I am a human and I've been drinking a gallon of water, so I gotta use the bathroom. All right, so sorry. I'm gonna turn the camera. Just, I don't know. Hold on. Boom. Do that. Nope. Boom. All right. Sorry. Be right back. Boom. All right, appreciate it. So, all right, we've gone through a lot already. We've spoken about credit stacking. We've spoken about what else we talk about? Why people get denied, how to overcome those denials. Now we're talking about how to legitimately get access to capital without running your credit. I don't know if anyone's covered all of these topics at one time together. But I know it's been bits and pieces, but there's a lot of cap out here. There's a lot of cap. Everyone has their thing that they're emphasizing. And my thing is, I want everybody to win. So, regardless of your situation, there is a way to get access to capital. There is a way to get money for you and your business. There's always a way for it, right? We just have to know what that strategy is. We have to know who we are in alignment with. If you have weak credit, there are companies that will give you money without checking your credit. We just went over some, right? There are companies that will still check your credit, but if your business is strong enough, if it's old enough, if it has enough cash flow, they'll still loan you some money. And of course, we know that if your credit is strong enough, your business age, business, none of that matters. As long as you got good credit, you can get access to capital. The important thing is setting up the strategy. I had a client who, I don't know if anyone can relate to this, but when she came to me, she just got out of credit repair. Like she just got out credit repair. Specifically for that, no. But you can Google it. You know, there's a lot of women organizations that have things like that. You can also check with any of your local CDFIs, right? If there are very specific niche things like that that you want me to look into, I can do that for you personally, you know, as as a search, as part of a funding strategy for you. I can do that, right? Speaking made volume. I don't even know what that means. So right. So I had a client where she just got out of credit repair and she wanted capital. She had a lot of other loans. Those loans were eating her up because they had crazy repayment terms, right? But she still needed more capital for inventory. And this may resonate with some folks. This was her very first time seeing her credit over 700. It was just the very first time she ever saw her credit over 700. And she worked for like 2 years to finally get it over 700. And it was like a 713. And she's like, Jamal, I want funding, but I don't want to use my credit score because I just got this 700. I'm like, now me knowing what I know, I'm like, well, that's what the credit score is for. The whole point of a credit score is to get money. It serves no other purpose. If you're not using it to get access to capital, there's literally no reason to have it. Literally. Like if you're not going for money, it don't matter. It don't matter. That's why when you're older, you can have a messed up credit score. You done did everything. You done lived your life. You raised your kids. You put them through college. You about to retire. You don't need an 800 credit score when you about to retire. Like nobody, you don't care. You're not about to use it for anything. It doesn't matter. So what? It's a vanity metric. But in her case, I'm like, you do realize that this is about to limit us because you just told me that you've been working all this time to get good credit. Now that you got it, you're scared to lose it or to use it. I'm like, all right, well, all right, let's do it. So using some fintechs and some other resources, right? I was still able to get her access to $43,000 in approvals without impacting her personal credit. Now, on another note, she went on and got her first zero interest credit card at freaking 1 a.m. in the morning. She texted me that she's about to cry because she got approved for a credit card. Like, that's how deep it was for her. She didn't even think she could get approved for a credit card on her own. So everyone's story and situation is different, right? The key is, again, strategy. Do you have the right strategy? Are you working with somebody that can actually cater to your exact and specific situation with or without good credit? Are you working with someone who's going to keep it 100 with you? Nah, she wasn't. She didn't have, she didn't own anything but the business. She didn't have a car. She didn't have an apartment. She wasn't looking to buy a house. She only wanted inventory for the business. That was it. That was all. Because when I work with my clients, I ask them all of those questions. What do you want the funding for? How much funding do you want? What's your goal for the rest of the year? Because what you want right now will also impact what you get in the future. Do you care about getting a UCC filing? Do you care if we do you only want business or you also want to use your personal? Do you care if we only do zero interest or are you also open to loans and lines of credit? What are we going for? Why are we going for it? Right? All of these things matter. Because if she wanted a home, she would have told me that. She would have said, hey, I also want to buy a house. Okay, cool. Do you want to buy a house under your personal name or under your business name or a business name? Because you can do that too. You can buy a house under LLC, and then that mortgage doesn't even show up on your personal credit, and that will actually help protect your DCI. Right. So all of that matters, and I ask all those questions with my clients. I get very deep, very detailed, because when you're going through the funding journey, things happen, things pop up, people change their minds. I've had clients start off saying, oh, I want 100,000. Okay. We start going through the process. We at like 40 something thousand. They're like, oh, wow, I'm really about to hit 100K. Okay, let's slow down. I think I'm good right now. One of my clients recently, she said, I want as much money as I can get. I said, well, you can get a lot of money. Like, give me a number. Say, I want it all. Say, you want to go for the gusto? She said, yeah. Say, all right, let's do it. We sat down. Within an hour, we got to 47,000. She started freaking out. Said, I don't really know. I mean, I didn't know we were going to get this much this fast. I think I'm okay right now, 47,000. So you sure? Because you say you wanted to go for the gusto. Like, it's only been an hour. It's only been four. We only done got approvals from 3 banks in 1 hour. We're at 47,000. So, I mean, you sure you want to stop now? Because we can keep going. So, yeah. So, anyway, I ask those type of questions with my clients. So, we talked about borrowing against your retirement accounts. There's no credit check for that. Borrowing against your stock portfolio. There's no credit check for that. All of these things have considerable risk. Read the terms and conditions of your exact retirement program. Read the terms and conditions of your exact brokerage account to see if that is going to work for you and your ultimate financial goal and your ultimate financial plan. Okay. Got to put that out there. That's the disclaimer. Last thing I spoke about before I walked away is cash flow lending. So if you have a payment processor where you're accepting credit cards, keyword accepting credit cards, where you have a device and people are swiping or tapping their card to it, right? Or you can send out payment links and people pay you typing in their credit card. They will monitor your payment history, well, your sales for 6 months, right? And then after that, depending on the flow and the consistency of the sales, they'll offer you some kind of loan. Typically, it was somewhere between 10 to 30% of what they see your annual revenue or project your annual revenue to be. So if you're doing 30,000 a month, cool. They're going to project it at 360. So I don't know, because I don't throw out random numbers as far as guessing. I have no idea, because a 648 doesn't tell me much, right? It tells me that you need to build your score up more, right? So with cash flow lending, they're going to look through your cash, your revenue, and what you can do actually, Jay, you can always set up a consultation with me. We can go through your numbers, because just a 640, yeah, just a 640, not sure. With a 640, we still need to look at the age of your business, still need to look at the cash flow of your business. Do you have tax returns? Yes or no? Do you have a business bank account? Yes or no? Are you able to produce business bank account bank statements? Yes or no? Then what do all of those numbers say, right? The numbers tell a story. I was telling my client this, the same young lady who had the store, and she had a 713. She didn't want to use her personal credit. So I said, okay, well, what do the numbers tell you? Because if you're not using your personal credit, or your personal credit is not strong, that's why everyone listen. I need everyone to listen to me. If your credit is weak, you're going to need collateral, you're going to need cash flow. I know the internet and everybody is focused on your credit score. Credit score is important. But if your credit score is not your strong point, we need collateral, we need cash flow. These are the three pillars of lending: credit, collateral, cash flow. How much can I get you? I have no idea. I am not the direct lender, right? I am not the direct lender. I am not the loan originator. My job is to get you into the position and connect you with the right lenders, so that we can get you as much as possible. But I wouldn't blindly just throw out a number just from you telling me that you got a 648, right? That would be unfair to you. That would be unfair to you. That would be reckless of me to say, oh, 648, I'll give you 50,000. It's possible with the right lender. With the right lender, depending on what it is you're trying to get lending for. Are you getting lending for a vehicle? Because it's a lot easier to get lending for a vehicle than to get unsecured lending, because lending for the vehicle is what? Collateralized. Exactly. You know what I'm talking about, Jay. It's a lot easier to get an SBA loan, because guess what? An SBA loan requires some kind of down payment. It requires some kind of skin in the game. So it's a little easier to get that, because they want you to put down 20%, as opposed to just going for zero interest credit cards. If we're talking about zero interest credit cards, they're not going for a 648 at all. They are not doing that. So the zero interest credit card conversation is out the window. But we could talk about loans. We could talk about loans. We could talk about equipment acquisition, right? We could talk about accounts receivable. So it depends. We could talk about cash flow lending. We could talk about MCAs. We can talk about equipment financing. So, that's why it's important to book a consultation, so that you can really get the full information, get the full scope, and really get an answer that's specific to you. Another way of getting access to capital, right, is equipment financing. So there's two ways to look at this. Equipment financing is that you're getting a loan to buy equipment. So that could be a crane, could be a truck, cargo van, etc. The other way is you're using your equipment to get access to capital. So you already have equipment, you already have a vehicle, you already have cranes or whatever. You have equipment in your office or equipment in your restaurant, heavy, big equipment. Now, let's say you have like $1 million worth of equipment. You can collateralize that equipment, meaning you can They'll put a lien against the equipment and then loan you money based on the value of the equipment. Remember, if we're not using our credit, we need to have something else to give these people. When someone is giving up money, they want some kind of guarantee that they're going to get paid back. I am not a guru. I am a man that helps small business owners get access to capital. If we want access to capital, we have to think like the bank. We have to. I'm not here to sell you a pipe dream. I'm not here to say, oh, no, I want all of my clients to understand what we doing, how we moving. We're moving. Yeah. We're moving towards getting the money and keeping the money. You don't get up to $1 million in capital running off on the bank. You can actually book a consultation clicking the pin link. It should be pinned. Hold on, let me see. Let me see. Is it pinned? It should be a pinned comment on the live stream. Let me see. Yeah, it's pinned. You would just click the link, book a consultation. Boom. Yep. 100%. That's how you do that. Right? So you book a consultation. We can go through it. It's 30 minutes. Right? So again, I'm not a guru. And it's important to me because full transparency, I only get paid when my clients get funding. So I have absolutely no interest in bullshitting anybody. I have no interest in selling a pipe dream because at the end of the day, if you don't get funding, I don't get paid. So I'm not here to try and rope a dope anybody. We here for the bag. Let's get to the bag. Let's understand what's required so that we can get you to the bag. I had a client today. He said, man, I want $1 million in funding. I said, you sure? He said, yeah, man. I said, all right, bet. Let's do it. Let's run it. I charge 10% commission for anybody that's wondering. So that's $100,000. We get him funded $1 million. That's $100,000 commission. Do you not think I'm going to help him get $1 million in funding? You goddamn right I am. And any other client that comes and say, hey, Jamal, I want to work with you, boom, let's do it. Let's figure it out. Right? But anyway, Ben, welcome back. Good seeing you again. What time is it? I have no idea. Anyway, just give me one moment. Boom, credit history, bow, how to book a consultation. Yep, cool. So equipment financing. You're going to use the equipment as collateral. They're going to put a lien on your equipment and then give you the money. So it's just like if you have a car, you don't pay them, they come take your stuff. Very simple, right? But again, this is another way to get access to the capital, even if you have weak credit. All of these are ways to get access to capital with weak credit. So, all right, Ben, let me answer your question real quick. So is the credit score a personal credit score or a business credit score? What would be the better option for me? I don't know, Ben. Did you give me some other details about whatever you got going on? Because both of these, and that's a great lead in to the next bullet point of how to get access to capital with a weak credit is build business credit. You can build business credit while also building up your personal credit. So while somebody is working on your personal credit, you're sending out, or you're doing it yourself, you're sending out the disputes, you're reading the books, you're doing your consumer law, right? You are quoting, the FCRA, the FDCPA, TILA, 15 USC 1681, 15 USC 1692, right? 15 USC 1666, right? You can do both at the same time. You can repair your credit, revitalize and restore your credit, your personal credit, while also building your business credit. You can do both of these simultaneously. You don't have to do one or the other unless you don't have the bandwidth, which I totally understand. Like, I think I built my personal credit and then I built my business credit. I personally didn't have the mental capacity to do both at the same time because I was working a job, helping people with their credit, and fixing my credit. I probably, yeah, I not even probably. I know I wouldn't have been able to add on building business credit on top of that. But if you're that person, you can absolutely do that. You can do both. Hire a credit repair company, have them fix your credit, and you can build your business credit. It doesn't take that long. You can have business credit in like 6 to 9 months, and then you can start going for vendor accounts and revolving lines of business credit within 6 to 9 months, right? Sometimes it may take longer than that to build personal, sometimes it doesn't, but you can 100% build up business credit. Now, with business credit, does that mean you're going to walk into a bank and get $200,000 from a bank solely with business credit? No, it does not mean that. What it does mean, though, is that you'll get access to capital and lines of credit from the essential vendors that you need to operate your business. Example, if you have a fleet or you operate a vehicle of any kind, you can get gas cards, right? Every major gas station has gas cards. There's also another gas card called ATOB. You can get a credit card with no personal guarantee. That means they do not check your personal credit. You can get credit cards from Sam's Club. You can get a credit card from Home Depot. You can get credit from Dell, right? Dell Computers, right? Where you can order from any of these stores as a business solely using your business credit. Like if you like ecom, you can always build up your business credit, order computers from Dell, and then resell the computers. That's all on business credit. Don't need your personal credit for that once it's built up. With Sam sells just about every damn thing you need in everyday life. So once you build up your business credit, you can get a Sam's Club card as a business, and that basically covers all your essentials, right? I don't know anything that Sam doesn't sell. Tires, food, Christmas trees, like whatever you want, Sam's has it, right? So some of those type of basic necessities you can get from Sam's, or if you operate a vending machine company, yes, Costco also has one. It's underwritten by Citibank. Um, right? So you can go to those stores, get that, and that's what business credit looks like. Business credit is more so business to business credit. I have a business, you have a business. I give you um whatever, a service or product. I invoice you, and then I give you a certain amount of time to pay me back. It could be as soon as a week. It could be 15 days. It could be 30 days, 60 days, 90 days. From what I've seen, 90 days is kind of like the max. That's when you are like Walmart level. Walmart, for instance, does not use its own money to fill its stores. All of that shit you see in Walmart for sale, they bought that on credit. They bought it on credit and they have 90 days to pay the bill. So they're going to buy it, put it on the shelf. We pay for it, right? We buy it from them, and then they pay back the vendor, Sony, Samsung, Honeywell, Apple, whoever their supplier is. That's how business credit works. That's why you want to build it, because it allows you to continue to operate your business. It's not going to allow you to go straight liquid cash. That's where personal credit comes in. That's why it's always going to be both. It's always going to be both. Some people who have that agenda that they only want to sell you business credit, they're going to make it seem like all you need is business credit. That's what they're going to make it seem like, until you don't only need business credit. And then they're going to be like, oh, well, I mean, I don't know. That's why it's good to have a funding coach, someone whose duty is to help you get funding. We're not going to sit here and just tell you to just get business credit. We're going to tell you to build both. 100% build both. Build both. When it comes to, I'll tell you guys this too, right? When it comes to funding and this whole funding money thing, is never one or the other. It's never one or the other. Some people, anytime somebody is out here and they're trying to just like make you choose a side or pick a side, or they make it like a spectrum, not a spectrum, make it an either or situation, it's definitely because they just want to sell you something. They just want to manipulate you. Because when it comes to funding, it's never either or. It's both. It's all of it. Who's going to give me money? Because I need money. We want money. I don't care. Personal credit, great, give it to me. Business credit, great, give it to me. PG, great, give it to me. No PG, great, give it to me. Why would I be like, no, I'm not going to build my credit. I only want business funding. And then you go through the process of only building up your business credit to find out that it's really, really, really fancy store credit that doesn't pull your personal credit. But you can't go to the bank and just ask for $400,000 to buy real estate. They're going to say, oh, okay, cool, great. So what's your personal credit score looking like? You're going to be like, I got a 100 Paydex 80 score. They're going to say, great, that's amazing. So what does your personal credit look like? Do you have the 20% down payment that you need to buy this, to get to secure this $400,000 loan or to secure this property? No, I thought I just needed business credit. Nah, no, no, no. You need more. You definitely need more. All of it. I need everyone to make sure it's, you understand, it's all of it. That's why when you check the descriptions of my video, right, I have a link for all of it. I have a link for improving your personal credit. I have a link for building up your business credit properly, the right way, right? I have a link to a video where I walk you through how to set up your LLC from scratch. Why? Because you need to do all of it. And you don't have to do it all at once. If you want to do it all at once, do it all at once. If you want to do it in stages, do it in stages. If you're trying to figure out what to start with, always start with personal credit. Always, because it's the fastest, most efficient way to get access to capital. A good credit score, when I say good credit score, 700 plus, 720 plus, is worth at least $320,000. That's typically like the cap. That's about how much the average person will cap out at. Like once you're at like over 300,000, the banks will just start denying you because you have too much credit for an individual, right? Regular people don't need $300,000 worth of credit. They don't, right? They absolutely do not. Regular people. I'm talking about regular people. We're not talking about us. We're not talking about us. We're not talking about us, right? They don't know about us. We on some other stuff, right? We on something else. We on the next level. But regular people, regular person don't need $300,000 in credit cards or credit, period. So even a bank, like a banker, if I walk into the bank and they saw I had this many credit cards, they'd be like, why do you have so many credit cards? I'm like, oh, you don't even understand. You don't understand what world we living in right now, huh? You have no idea why I have this many credit cards or why it even makes sense for me to have this many credit cards. You don't even know what game we playing right now. And they don't. And they won't. And that's great for us because we understand the game that we're playing. We know why we getting access to this credit. We know that we can take these credit cards and turn them into assets. We know we can liquidate these credit cards and turn it into whatever we want. You could turn it into land. You could turn it into real estate. You could turn it into crypto. You could turn it into stocks, right? That's another reason why people love zero interest credit cards, because once you liquidate it, it's essentially a zero interest loan to yourself that you can go out and do whatever you want with, good and bad. So, it's like a loaded weapon. It's like a loaded weapon. Just like a loaded weapon, you need to train, you need someone to teach you how to use that weapon, right? What is it? What are the proper ways of using it? How to load it, how to discharge it, how to clean it, how to maintenance it. You got to do all the same things you do with a loaded gun. You have to do the same exact thing with credit cards and with your credit 100% of the time. Because just like a gun, you can use it to put yourself in a better position to protect yourself or hurt yourself. Worse, kill yourself or someone else. Let's see this. What would be is that we can do both at the same time? Yep, Ben, we can definitely do both at the same time. You open the LLC, is it likely to get funding? I actually never heard of anyone funding an LLC in their name. Now, we're going to the putting the LLC in your name gets into a little deeper topic, right? Where that's when we start talking more about moving into the private. But you can make an LLC in your name. You can apply for credit under a LLC that's in your name. It's still a LLC. It applies. It's the same rules. It's a LLC, right? Now it gets even deeper if you decide to start a LLC with your name and you create a trust and then put the LLC under the trust and then trademark the LLC that just also happens to be your name. And then just so happens, let's say you do that. Let's say you create a trust and you create an LLC that is your exact name, because a LLC, as a single member LLC, it is a disregarded entity. And let's say you put a trademark on that LLC that just so happens to be your name. Now, once you put a trademark on that LLC that just so happens to be your name and you start getting credit, and then they just so happen to send you bills and they're using your trademark name for capital gain, I don't think another company is allowed to use another company's trademark for capital gain. Right? So, yeah, it seems odd because it's high level. It's a high level strategy. It is not basic. It is not a regular strategy. There's a lot of moving parts. There's a lot of moving parts. There's a lot of things that go into a play of that magnitude, right? Let's see. Okay, real estate. Yep, real estate is crazy. Like, as much as I know about credit and funding, I got my guy. He is my personal real estate guru because it's a whole nother world. He is a hard money lender. So all my clients that come to me and they're like, hey, my credit is this situation. I need some fundings for some real estate projects. I'm like, boom, I'm gonna connect you to my guy. He is my hard money lender. I got you. No problem. Working a living executive assistant, marketing successful serial, want to begin my own. Started using his knowledge he shared when asking him. That's dope. That's hella convenient, David. Hella convenient. That's amazing. Now feel file as a S corp status. Would you recommend this even if we're not hiring? So with the S corp situation, that's really So when we're talking about an S corp, right? That's more so on the asset and tax side of things, not necessarily. Well, it also goes into funding, right? Because of course, an S corp corporation can issue out stocks, and you can do fundraising by issuing out stocks and pieces of the company and selling your equity. The other side, though, is on the tax side, and I learned this from my CPA. I am not a CPA. I do funding. That's what I do. But yes, distributions as well. So it is more of a tax strategy than solely a funding strategy, and also an asset protection strategy. So there are a couple of requirements that are required when you're filing or you want to be an S corp, including the revenue, also the number of employees that you have. Right? They check these things when you're becoming a S corp, and then of course you have your meeting minutes, your corporate seal, the binder, all that good stuff, right? So I don't know if it's really necessary just for the sake of funding, but if you have a much okay, if you have a much larger goal, no, my fund the oh you started okay, you came in late. So the funding I'm talking about, David, actually is traditional funding. So I specialize in bank funding and bank financing, right? So I do not specialize necessarily in the C corp corporation level as far as seed rounds, private investors, angels, etc. My focus is helping small business owners get access to traditional bank financing. But as an S corp, yes, you would want to be an S corp. Do your rounds, do your series, do your fundraising, do your pitches, your pitch deck, have all that together to scale up your business 100%. Hell, I mean, you can always have an LLC and an S corp, right? You don't have to limit yourself. You can get creative with it. But very transparent about mine, right? Okay, cool. So we went through a lot, got off on a tangent. So we went through some ways that you can get access to capital without using your own personal credit. David came in with the sledgehammer. He definitely dropped some game on more ways to get access to capital without using your personal credit. You set up an S corp, and then you start basically asking individuals to invest into your thing. That's what you're doing, or VC firms. So you got angel investors, seed rounds, Series A, B, C, and angel investors. And in that world, it's all about who's on your team and who you know. So you definitely want to, you can, yeah. So you can have a LLC tax as an S corp, or you can just create an S corp. Yes. Um, but with that, again, you want with those type of things, you want to speak to a tax professional, preferably a corporate tax attorney that can really break down all of the implications. Is getting late. All the implications of having an S corp, because there are different requirements and fees. Don't let that go over your head. Okay, it's different fees too. Because once you become an S corp, there's a totally different tax schedule, filing schedule, fee schedule, all of that than if you're a sole prop or a single member LLC. So keep that in mind. All right, cool. So I said a lot, right? But ultimately, I want everyone to know that getting access to capital, getting funding is a lot easier than what you think. Y'all let me know that. Open your eyes. Does it seem a little more attainable now? I mean, we went through the three C's. We went through common reasons why people are denied funding as a new LLC or even a startup, right? And the thing we want to focus in on is you want to optimize that profile. Keep good personal credit. That is the foundation of everything. Like, it is. If you don't have good credit, somebody on your team needs to have good credit. You want to build your banking relationships, make those deposits, get in good, getting good with your bankers, right? Set up payments. Like, if you really want to build an amazing banking relationship, set up a checking account, set up a savings account, and set up a merchant account. Okay? A merchant account is a payment processor. Most banks that do business checking also have some kind of merchant services. So they will handle receiving all of your payments for you. This is great because it allows them to track your income for you. So after a couple of months, let's say after 6 months, and you say, hey, I'm looking to expand, I need $70,000. They can look at your cash flow coming into the bank. They don't have to ask you for tax returns. They don't have to ask you for any additional documents because they have, right, because they have your transaction history. They see that you're already bringing in all of this money through their merchant account, and they love you for it because you pay them for that merchant account. Let me see. All right. So that comes from building up a solid relationship. Okay. Um, of course, you always want to make your payments on time. Got to do that. Nobody's going to lend you money if you're not making your payments. That's it. And of course, you have to have a strategy. I can't stress this enough. I know we asked a lot of different questions. What if I have this score? What if I have that score? What if, a credit card was shut down? What if, I have high utilization, low utilization? I just opened a loan, whatever the situation. I'm a man, I'm a woman, I'm a minority, um, I'm a veteran, right? There is a funding strategy for every single situation. But the thing is, you have to be able to sit with someone who's going to help you with that strategy. Or you can hop on these lives at, whatever. Well, for me, it's like 3 o'clock in the morning. But you can hop on a live like this and try and piece it all together. Or you can just work with someone who will piece it together for you or with you. I prefer that. I actually have mentors that help me with my funding even now because, all right, test, sound check. Y'all can probably hear the AC blowing in the background because I took the mic out. Mic check. Let me know if you can hear me. Let me know that you can hear me. Because if you don't tell me you can hear me, I assume you cannot. All right, let me see. Boom. Okay, I see some. You said all set. Okay, David said you can hear me. Okay, two people said they can hear me. Awesome. So it's important that you have a strategy. I can't stress it enough. Everyone here, you guys had asked some amazing questions, and everything that you asked really depends on the strategy. Like, hold on, let me double back. So I saw a couple of things about. Okay, all right. Reginald said 3 year established 655. Yep, there are state programs. So in that instance, one strategy is looking at the SSBIC. That is the State Small Business Credit Initiative. That is a countrywide initiative that is designed to help small business owners with less than perfect credit get access to capital. What if you're starting out with your business and you have a 688? I mean, what if? What about it? 688 is fine. I got approved for 3 credit cards with a 688. So, you could definitely get approved for that. Info women disabled owned businesses, absolutely. There are specialized groups for everything, including women and disabled. You got nonprofit institutions, CDFIs. You have nonprofit organizations that lend and offer grants. So yes, there are opportunities for every situation. Let's see. Boom, doop, 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 doop. Yes. Canny. Yes. To book a consultation, just click the pin link. It is, yeah, it's definitely pinned. Just tap that. You're able to book a consultation with me. It's 30 minutes and it's via Zoom. Okay. Do you set up LLCs with trust setup? I do not personally set up trust. I do have an attorney that specializes in setting up trusts. Even though my background is in probate, I worked in probate court for 7 years. I do not set up trust, but I have access to attorneys that specialize in setting up trust. Any type of trust you want, whether it's revocable or irrevocable. All right, let me see what else we got going on. Mention, that's dope. S Corp, right? We spoke about that. Startup funding, right? Nothing traditional funding when it comes to we work in DeFi and just sign a deal with Brinks US. Would banks fund us? Would it be worth it for us? DeFi. So with DeFi, that's a totally different world, honestly, because traditional banks do not fund other financial institutions. So typically with DeFi, you're looking at. I have not started a DeFi company before, so David, you'll have to educate me, but make sure I'm on a ask. Let me know I'm on the right track. Typically, because that's more of a financial institution, you'll have to go through. Of course, you got to set up your board of directors and your team and DeFi. You don't have to get chartered, right? Banks, and credit unions have to be chartered. I don't think DeFi has to be chartered because that would kind of defeat the purpose of being decentralized, being chartered and controlled by the government. But typically, as long as you have a team of people and you can pitch that bitch, you good, right? And of course, with you're going to be doing more private funding. So venture capitalists and angel investors and pitching to hedge funds basically are what you all are going to be doing. The banks definitely aren't going to rock with you in the traditional sense, but one of their investment arms will, definitely dump some cash your way for sure. I would definitely love to learn more about setting up a DeFi. And it Camden's on where you are, i.e., state taxes. I think that may be Canny. Canny, you say, and it Camden's. Maybe that's supposed to say it can depend, and you're absolutely right because every state has its own fees and tax rate. And that's why some people like Florida, they like Delaware, they like Texas because those states don't have an income tax. So you save a shit ton of money during tax season. Angel, what is this? Angel, my name is Jamal. I'm the credit protector. I'm a credit coach, a funding coach, and my whole goal is I help small business owners get access to capital. I've been on this live for 2.5 hours just talking, giving the real about business funding. Everyone is fundable with the right strategy. And it's important that we take time to understand which strategy is going to work best for you in your exact situation. What I like to also tell people is that not only is everyone fundable, but don't limit yourself on the type of funding that you can get. Look for it everywhere. If there's something that I personally don't specialize in, that's fine. But use me for what I'm good for. Let's get this money, and then you can go to someone else that specializes in crowdfunding, specializes in grants. But when it comes to this banking and getting money from the banks, that's my shit. That's what I do. Right? So let's see. Boom. That's what I do. I help small business owners get access to capital. And I hope that this offered some level fully decentralized. Holy shit. That's fire. Okay, bet. Get the fuck out of here. Are you serious? To centralized banks. See, man, I knew that shit was going. Man, bro, I knew that. Now we about to get off on a tangent. I knew that shit wasn't gonna stay decentralized. Everyone who was making their money in crypto, they already made it. They made it 10 years ago when Bitcoin was still fucking on the dark web and fucking Binance and shit was new. Like reversed. Yeah, man. And y'all just signed with Bricks. With Brinks. Oh man, it's over. Listen, everybody. Listen. If you're not familiar with what the fuck decentralized finance is, I highly suggest you get hip, because he just said they signed up with Brinks. David, I don't even know you're supposed to be saying this on a public platform, bro. But maybe it's because I got a small channel. But this is crazy. That's fucking crazy. That's crazy as hell. I'm just gonna let y'all know, digital currency is coming to America. Like they didn't do that well with what's that joint? Tether, the Tether coin or the USD coin, but they working on it. They working on it. China already got theirs. They already implemented into to their society. They got it where they got social currency at this point. They just scan your face and give you a credit score. So if y'all not, man, get some, just buy some Ethereum and some Bitcoin. I don't know anything else about the other coins. Like I got some Cardano, what is it? Cardona, but you know, it like fucking collapsed or whatever the fuck. So it's not worth anything. I didn't get into XRP because it was too, absolutely, it was too hard. Like XRP had me jumping through hoops. I wasn't rocking with it. But listen, get digital currency, okay? And if you're afraid of investing in it using your own money, get a credit card that gives you cash back in the form of crypto. They have it, crypto.com. I think they still do that. They still have a credit card, multiple credit cards. Crypto.com does it. You got M1 Finance. You got the Gemini credit card. You got SoFi credit card. These are four credit cards that you can get crypto as cash back. You don't have to spend your own money. Okay? Get any of these four cards. That's just some extra game because David just said they're going to freaking centralize cryptocurrency. That's what he said. That's fucking crazy. Crazy as hell. So everyone, if you don't have a cold wallet, get a cold wallet. That's it. That's all I'm gonna say about that. All right, what else we got? What else we got? Do. She just blew my mind with this DeFi situation. Like, what the fuck is going on? That is crazy. Um, my bad, y'all. Start. Can you get 5 late payments in a row reverse? Anything goes. I mean, maybe anything's possible. You know what I'm saying? Can you get it done? I've seen it done. I've done it. Is it worth the effort? At 5, you're probably better off just removing the entire account as opposed to 5 instead of trying to get those accounts reversed. You're better off just deleting the whole damn account. Let's see. Do. PC having this best, but you can still profit on the next. True that. Let me know when the next one is, because I have no idea. All right, let's see. Okay, cool. Boom. Anything goes. I answered that for you, my brother or sister. 5 late payments in a row reverse. It is hard. You're better off trying to delete the account altogether. All right. So yeah, David, that's crazy, man. That is super crazy. Damn. Wow. All right, and I'm not even a crypto head for real. Like I just got, like I said, the basic stuff. Some Bitcoin, some Ethereum, some Cardano. I experimented with some staking and what was that shit called? Wonderland. But I got in way late in Wonderland, so that was way late on that shit. I think I ended up turning it into like Pancake Coin or some shit. And after that, the Bitcoins, yeah, Bitcoin and Ethereum, but like all the other stuff, hell nah, that shit done fell to shit. The Wonderland time, that's dead. That been dead. That died a long time ago. But anyway, all right. So going back to funding, everybody, going back to funding, right? Along with building it, positioning is key, right? We talked about a lot of different things. Just to recap for everybody that's just joining in, all right? And if you've been on here this whole time, definitely shout out to you for being here. Drop a 230 if you've been on this thing for this whole time, because we at 2.5 hours. Drop 230 if you've been on here for 2 hours and 30 minutes. Or even if you've been on here for longer than goddamn 45 minutes. I appreciate you. Thanks for rocking out. Hit the like button. Share this out with other people. You want to book a consultation? Go ahead, click the link so we can talk about your exact funding strategy. All right, Ben, shout out to you, Ben. Ben, you on the West Coast? Cause I'm like it's like 4 a.m. here. It's 3:30. Candy, shout out to you. Shout out to y'all. For sure, for sure. Um, Definitely. Shout out to y'all. So positioning is key, right? And here's the thing that we want to understand. That's a high on the West Coast. West side, I see you. Any tip options? What you mean? Are you talking about options trading? Or what? So positioning is key, right? Here's the thing. We mentioned credit stacking. West Coast, okay, Candy. I see y'all. Thanks for tapping in. Definitely. I love the West Coast. My client, I actually had a consultation with a client there in California. So I'm looking forward to rocking out with them. Oh, damn. I don't know. How to drop a donation? I have no damn idea. Shit. I don't know. I don't even know how to do that. This is what I do. If you want to do a donation, you can actually just Cash App me. My Cash App is dollar sign, and they don't let me type in this thing. Damn, I can't type. All right, so it's dollar sign MAAL Johnson. That's it. So dollar sign MAAL Johnson. If you want to leave a donation, because I do not have super chat turned on here. I don't think so. So that's you can do definitely do that. Yep, you can definitely do that. I greatly appreciate it, David. But it's dollar sign Maljohnson. Cool, cool. All right. So we spoke about the strategy of credit stacking. That's when we go to different banks, we apply across different banks, and get funding from individual banks all at once, tally up all of those receipts, and boom, that's our funding spree, right? And that helps us mitigate our risk. Banks are also in the same business. They're in the business of mitigating their risk. They are not in the business of lending to people that they find risky. Banks are businesses. They loan out money so they can make a profit on the interest, right? That's why they're loaning out the money. So they're in the business of avoiding risk. So our job as those that want the money, I appreciate you. Our job as those who want the money, our job as those who want the money, right? Have to make sure that we present ourselves in the best light possible when we're going for this money. The great thing about that is that it's all about your paperwork, it's all about your numbers. So you look good on paper, they're going to give you the money. We can try and fight against it. We can say how unfair the system is. We can say, you know, we can say everything. And it's all true. We could talk about redlining. We could talk about capital, just generally speaking, being withheld from certain communities. All of those things are true. But now, when the paperwork is in order, they don't really have a reason to deny you, right? Some people say that the credit score is racist. I had an 800. Like, I made it to 800. So I don't know. Like, I was 36. Black dude. I made $60,000 at the time. I only made $60,000 and I had an 800 credit score. So I don't know. I don't know how racist the credit score is because I had an 800. I'm using it, so it's not an 800 anymore. Anytime you're applying for credit, your score is going to drop. Don't stress about it. It'll come back up. No biggie. It's not even real. Your credit score is not even real, y'all. They made it up. Okay? They made it up and it's not regulated. There's no law regulating your credit score. They can change that shit at any time. They can just change it and make it some new shit anytime they want to. That's why they're on FICO 10 right now. This is the 10th time they done changed how this score works. So don't freak out about your credit score. As long as you know the 5 factors of your credit score, you're good to go. And there's none of those 5 factors are based on race. In fact, they have a law to protect you against discrimination based on your religion, sex, age, and race. It is called the Equal Credit Opportunity Act. The ECOA. Okay? So, yes, I had an 800 credit score. Meaning I look great on paper. Your goal, our goal, when we help you, right? When I work with you, when I work with my clients, I want them to look good on paper so that we can get the most money possible, right? If you don't already look good on paper, we are going to help you look good on paper. If you already look good on paper, then hey, at that point, it's nothing more than the strategy of where we want to go and why we want to go there, right? Because certain banks are good for certain type of products. Strong relationships matter. And right now, exactly. Yep. If you leave America, fucking FICO score doesn't even exist. Nobody uses it. Just now, other countries are trying to develop ways of checking a person's credit worthiness. They're like experimenting with it, but it doesn't exist the way that it does here, right? In certain countries, it's literally illegal to run off on debt. Other countries don't even have a bankruptcy system. That's not an option. Like if you go to the Middle East and you take out a loan, and you're a foreigner and you try to leave the country and you ain't pay that shit back, you get arrested. They will take your ass to jail for not paying your debt. They literally have debt slavery. Like, you ever heard that yeah, debt is slavery? Or what's that Bible verse? The debtor is the slave to the lender. They mean that shit. You will go to jail. Legit jail. Not for play jail, not that white collar crime embezzlement jail that we got in America. They take your ass to the regular jail where everybody else at. Your ass ain't getting fed. You might get beat because you wanted to run off on a bank. Not happening in other parts of the country at all, right? So anyway, going back to running off or not running off, the banks are getting more and more strict. Okay, for instance, you probably heard that do a foreign filing, right? File a foreign entity, in a state that you don't live in or your business wasn't originally set up in. So file in another state, build relationships in that state, and then go for funding. Or set up an LLC in that state and then 2 days later walk into the bank and you walk out with $25,000 from that bank. That is no longer the case. That is no longer the case. The days of setting up a foreign entity today and then going and getting doing a funding spree on Friday and actually getting approved is dead. I know because one of my friends, we were having a conversation about it. He was telling me he's setting everything up. He's in Chicago. He's like, I'm going to set up these LLCs. I'm going to go to Pennsylvania because Pennsylvania has a lot of amazing banks. Just FYI. And I'm going to run the play. I said, okay, cool. Let me know how it goes. So far, 4 banks. To my knowledge, she's 0 for 4 right now. Banks are not rocking with the foreign entity play the way they used to. They're not. The credit crunch is real. And the banks, they're not as forgiving as they were during the pandemic. What the hell's wrong with this mic? They're not as forgiving as they were during the pandemic. Right? Boom. 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 Okay. And the thing is, all this shit is confusing. Right? I mean, it's been 2 hours and 40 minutes and I still haven't even scratched the surface of every conceivable way that we can talk about funding. Like, this is all just foundational information that anyone who had no idea about what the fuck funding was, you should at least have an idea about what it is now. Like, let me know. Do y'all have a better, like, for real? Because do you have a better idea of what funding is and how it works, especially when we're talking about funding from the bank? And if so, what key takeaway did you get from this? I know it was a lot. We went a lot. I didn't have any slides. I just went live. What key takeaways did you get about funding? So that way, at least I know like what stuck, and anything else that didn't stick, I can always continue to overemphasize it in future lives. Like, that would really help. That would help a lot. Cool. Candy, what stuck out to you? Like, what thing really stuck with you? Been immortal, cool. Let me see. I want to keep applying to credit cards to leverage points. Absolutely, but keep seeing mixed info. In your opinion, how many cards should I apply for in a 3-month period? David, how many cards in a 3-month period? I'm going to be honest with you. As many as you can get away with. how many cards to apply for, as many as you can get away with. Now, when it comes to the hard inquiries, assuming that you actually get approved for every single credit card that you apply for, and assuming that every single card you apply for shows up on your personal credit report, and every single card you apply for comes with a hard inquiry, I would say about six. Because once you have about six hard inquiries on your credit report, you'll automatically begin to get denied for new credit cards. Okay. So I would say about six cards within 3 months. I know that is not a lot of credit cards, but for the sake of hard inquiries, um, I would say that. Because once you're at six, you're automatically going to get denied, regardless of how good your personal credit is. Absolutely, Ben. Absolutely. 100%. Candy, did you just copy Ben's answer? I'm playing with y'all. I'm playing with y'all. Right. So at the end of the day, it's very confusing. And there's so many different rules to the game. Like this was just the basics. We didn't even touch on awesome. We didn't even touch on business credit, right? We didn't get into building out built business credit. We didn't get into, the different tiers, right? How to build out the different tiers. We didn't get into the business credit reporting agencies. We didn't get into their scores. Like we just touched on like surface, like barely scratched the surface of everything, right? And all of this stuff is really confusing. Funding is confusing. It's hard to create a strategy if you don't know exactly where to start or exactly where you're looking for. And David mentioned this, and a few others mentioned this, that every time you get online, somebody is saying something different. 24 hours, Candy. You can remove a hard inquiry in 24 hours. And everyone says something different about what strategy. And that's because funding and credit is personal. It's a personal journey, right? Not everyone is going to get to an 800 the same exact way, even though there is a formula. It's a very simple formula to get an 800 credit score. It's not hard. It's just that everyone gets there a little differently, right? Okay, respect, Candy, respect. And at the end of the day, without the right strategy, without working with someone that's going to give you the right strategy, right? You can still end up running into a brick wall. You can still end up getting approved for low limits simply from not having the right strategy, right? And if I can't emphasize anything enough, is make sure that you get with someone, right? Could be me, could be anyone else that is able to help you put together a strategy so that you can get the funding that you're looking for, right? Because at the end of the day, as business owners, as entrepreneurs, as investors, you want to be less stressed about funding. Like you don't want this to be the thing that keeps you up at night. You want to know for a fact, okay, boom, I already got my game plan. It's on my whiteboard, it's on my spreadsheet, it's in my email, it's on my Excel sheet. I already know what banks I'm going for and how much I want from each bank. I know what product I want from each bank. I already know who these banks pull from, right? I already know that my business credit is built out. I know my personal credit is built out. So I'm good. I got my whole strategy ready, right? Okay, you heard that from somebody? Yeah, they're wrong. That's it. That's it. That's all. They're wrong. It doesn't take 12 months at all. I would be out of business if it took 12 months to remove a hard inquiry. Like that's ridiculous. That's crazy. Um, right? So you don't want to keep yourself up at night doing that. You want to work with someone who can help you build it out. remove all the stigma, remove all the confusion, right? In fact, Candy, this how we know that's not accurate. Because part of funding is removing the hard inquiries as we go through funding. We go through funding, we remove the hard inquiries, then we go do more funding. We're not waiting a year to get somebody funded at all. Never. And this way you can, and to your point, when working with someone that knows what they're doing, you can eliminate all the second guessing. You eliminate all the confusion. You eliminate all the he say, she say. Well, my friend said this, my friend said that. It's like, well, does your friend do funding for people? Does your friend help small business owners get access to capital every day? Is that what they do? Because if they don't, they're probably only speaking from their limited personal experience, right? And this way, as a small business owner and investor, you'll have time to focus on growing your business instead of completing applications and trying to figure out something as simple as how to remove a hard inquiry. Right? I have 2 videos on how to remove hard inquiries, and maybe you missed it, Candy. I actually gave away the phone number of how you can get my hard inquiry removal guide. So I actually have a guide that guides you through, walks you through the process of removing hard inquiries in 24 hours. Right? Facts. So let's see. Boom. Awesome. So that's the benefits of working with someone who does funding. Candy, matter of fact, did you find the consultation link? I have it pinned. I know you were looking for it earlier. Did you find it? Let me know. Yeah, and that's the thing. The people that work at a bank, they don't know anything about credit. Oh, you didn't hear? Yeah, they have no idea. He has no idea. He just made that up. He has no idea how long it takes. Because this is the, I'm going to give you the full rundown about hard inquiries right now. Cool, you got it? Cool, you booked it? I didn't see you on the, I didn't get any notifications about the calendar. So, yeah. All right, so hard inquiries, right? Here's the full rundown real quick. Hard inquiries stay on your credit for 2 years. 2 years they stay on your credit. They impact your FICO score for 1 year. So we're talking about 2 different things. How long does it stay on your credit? If you don't do anything to remove it, it'll be there for 2 years. How long will it impact your FICO score if you do nothing about it? 1 year. How long will a bank consider or look at the number of inquiries you have when determining whether or not to approve you for credit? 6 months. Okay? So the number of inquiries you have within the last 6 months play a huge factor into whether or not you're going to get approved for more credit, especially credit cards. They definitely don't like to see more credit cards or a lot of inquiries related to credit cards, right? Another thing about inquiries, because it's never just that surface level, right? Let's get deep. It's been 3 hours. You might as well get deep. It's never just that simple, right? Along with that, it depends on the kind of inquiry. So if you have multiple mortgage inquiries done within a 45-day window, or you have auto loan inquiries done within a 45-day window, the FICO score, I have to specify that. The FICO score will count all of those inquiries as one. I'll say it again. If you have multiple inquiries for auto loans or mortgages within a 45-day window, the FICO score will count all of those inquiries as one. That way, it doesn't have as much impact on your credit score. Now, that does not. I appreciate you. Thank you, David. Enjoy your fourth as well. Now, will that mean? Now, that's just how the FICO score interprets it. That plays no impact as to how a lender is going to interpret all of those hard inquiries, because the FICO score is just one of the metrics that a lender uses to determine whether or not they want to give you money. Because you can have a great FICO score and the lender will still deny you. That's why it's not always just about the score. It's about what the story tells on your credit report. Some lenders just don't like to see a lot of hard inquiries, period, and they'll just deny you because you have a lot of hard inquiries. Right? So that's the breakdown. That's the deep dive into hard inquiries. That's how that works. Unfortunately, your banker friend, he or she probably doesn't know that, and that's normal. A lot of bankers, they really don't know anything about credit, like at all. When I was doing credit repair, I had a lot of clients that worked at banks. A lot of them. They don't have money management skills, like they're regular people like us. I had an acquaintance that was a branch manager. She didn't know anything about points and miles, and she worked at a bank. She didn't know how to maximize her points and her miles. All she knew was how to maximize the zero interest on credit cards. That was it. And that's fine. Never pay interest again. Great strategy. I love it. And anybody can do it. It's actually very easy to just never pay interest on credit cards ever again while carrying a balance. Right? So with all this being said, listen, we went through a whole lot. A whole lot. Right? And I actually stretch this out because when I do this on Sundays, I typically keep it between 90 minutes. But, it was great interacting with you guys. That's it. Right? From here, you want more information. There's a ton of information all over my YouTube channel. I have over 400 videos, including more lives. This is the longest I've ever been live, but definitely more lives that are also over an hour long, going over different topics, right? If you feel like you watched enough and you want to work with me directly, definitely book a call. We could talk about what it looks like for us to work together. Do you want funding? Are you looking for funding? Canny, you need to do it. Go ahead, click the link, set it up, right? Click the link, set it up, book the call, or binge watch me. Okay? Because there's only so much that a person can, I mean, there's only so much. There's only so much. At some point, I got to go to sleep too. What time is it? It's almost, oh wow, shit. It's almost 4 o'clock in the morning. Damn. That's crazy. I didn't realize it was almost 4 o'clock in the morning. That is wild. So yeah, definitely, right? Book the consultation. It's going to be a short week. Absolutely. Good night, good night, good night. Right? And you want to do it now because the slots fill up. But yeah, I'm out. I'm about to take me a nap. Yep, it is 4 o'clock. And I am still up talking about funding. So yeah, I really do this. I don't know how many people are up right now live talking about funding at 4 a.m. This is what I do. It's all I do. I don't have anything else to do but help my people, small business owners, investors get access to capital. So you guys have the foundation now. This is the starting point. This is your foundation. This is your launch pad. Take it and reach the next level. In the meantime, in between time, stay tapped in. I will see you guys on the next live. Like, subscribe, and I'll talk to you guys later. All right, peace.